Hi guys, and welcome back to James Talks Property. This episode is focused on one of the most important things in property investment, whether you're just starting out or looking to scale your portfolio, and that is goal setting. Believe it or not, your investment goals will really shape your property investment journey. And the reason for that is it will help you decide which strategy is right for you. And whether that's project-based investment or hands-off passive investing, you'll really understand what that looks like once you know what your goals are and the timeframes of those goals. Let's get started. So why is goal setting so essential? Without a clear destination, you'll often find yourself going in circles and getting distracted along the way and seeing lots of different strategies that may sound more interesting or more sexy than what you're doing right now. These are often just distractions. So when you're clear on your goals and you know how you can get there, then you can stay on track to achieve those in the short or long term, depending on what you're trying to achieve. This is what lets you invest with purpose and confidence and should be a non-negotiable for anyone looking to achieve anything within property investment. Let's talk about your why. Your why for you may be really easy to come up with, but you'd be surprised how many property investors I speak with, whether they're on the first property or the eighth, and they still don't really know why they're investing in property. Whether it's financial freedom, generational wealth, or passive income, choosing your specific goal for you will help you stay focused and resilient. That might be £5,000 a month in the long term. It could be replacing your day job or building a pot of cash or an equity within your portfolio to pass on to your kids in 15, 20 years' time. For me, there's no right or wrong. Your goal is very personal to you and what your personal situation looks like. However, without defining this, it's very difficult to make steps in the right direction to achieve that long term. And this will keep you focused when there ultimately is challenges that pop up. Because property is not always straightforward, there will be challenges along the way, and this will help you navigate those challenges. So let's break down short-term versus long-term goals. Short-term goals will be more about building passive income and experience within the first few deals that you do. So for someone approaching retirement or at the age of retirement with a pot of cash to invest in property, they may invest in things like short-term lets, HMOs or high-yielding buy-to-lets, rather than things that are more likely to grow in value in the long term. If you're looking at property from a long-term perspective, then that's where things like buying properties in areas of improvement, so regeneration, are important. Buying properties that are already in high demand, but where that demand is improving or increasing over time to benefit from the long-term appreciation of the asset. Having said that, as you scale your property portfolio, you'll probably buy a mix of properties. Some will be focused a little bit more on the short term and some focused on the long-term appreciation of the portfolio. Next, let's talk about your risk tolerance and your comfort zone. You have to ask yourself what your risk tolerance is, how much capital you have to invest in property or you're willing to invest in property, and whether you want to take on debt. For most people, leveraging debt is definitely worthwhile doing, and it's one of the real benefits of investing in property. However, we'll jump into more detail on that in another video. The reason you need to know your risk tolerance and the amount of cash you're willing to invest in property is because this will also influence the strategy in which you choose. If you aren't able to invest a lot of money or you're not able to risk a lot of money with your property investment, then you're likely to go for some slightly more passive investments like buy-to-let properties. However, if you're willing to invest more money or get into a strategy that's a little bit more risky, then you could achieve your goals a little bit faster. Like anything though, finding a balance between risk and reward is really important when property investing. So we know your why and we know your risk tolerance, but now we need to set a time frame to your specific goal. Are you investing in property for the next 5 years, 10 years, or 20 years down the line? Because this will also shape the strategy in which you need to choose for your investment goals. For example, if you want to quit your job within the next 5 years, then you may need to go for a higher risk strategy like buy, refurb, refinance or flips, rather than a more passive investment strategy like buy-to-lets. However, if you're investing for the long term, then a buy and hold approach with buy-to-let investment properties is most likely to give you the best opportunity to build your wealth in the long term. So, what do you need to do? What you need to do is think about all of these things and work out what the best strategy for you is. Again, if you're a busy professional and looking long-term for property investment, a buy and hold strategy will work better for you, especially if you don't want to take on too much risk when starting out. Having said that, if you've got a bigger risk tolerance, you've got a bigger pot of cash and you want to achieve your goals in a shorter space of time, then more project-based property investment is likely to be best for you. So now you have the tools to decide which strategy is right for you moving forward. What you don't want to do now is get stuck with analysis paralysis. And that's essentially where you spend too much time planning and don't ever actually invest in property. I often speak to investors that have the intention of investing in property. They want to go out and do it themselves and do flips and refurbs or project-based investment. And when I come back and speak to them in 6 to 12 months' time, they still haven't done anything because they're still planning how they're going to achieve their goals. The truth is that no plan is perfect. There's pros and cons to each strategy, but once you decide what strategy is best for you, you need to go and give it a go. You can always change your strategy after you've tried something. If you've tried a flip or you've looked at buy to let and it's not quite right for you, we can reassess and go again. However, if you just keep putting things off, you'll never achieve your goals. So don't wait for a perfect plan. Start with a basic one and take the first step towards your investment goals. If you are someone that struggles with taking action or over-analysing a strategy, then read the book, The Lean Startup. Although it's not directly about property investment, there's lots of concepts in there about trial and error and giving things a go and learning on the journey, which is what you need to do within property investment. So there you go, you've got your goals and you can work out your strategy based on those goals moving forward. And that's it for today's video. So thanks for watching and I'll catch you in the next one.